Good morning, everyone. Welcome to the morning brief on September 22nd on Tuesday. All right, some changes are coming to the morning brief. You'll see that show up either tomorrow or on Thursday, but have a little different format rolling in and then kind of picking up the agenda more towards the 15 minutes prior to the point. But you'll see all that tomorrow or on Thursday, I should say, as a new release. But the show is going to go out and it's not going to be live streamed right away, but there will be a point where it goes to either it's actual live being live streamed or it's going to be on a delay. Either way, I'll let you know how that affects you guys. But the more vocal you are in the chat, of course, the better we are as far as having a conversation back and forth versus me just presenting information. So, but that's my issue, not your guys. So we'll work through that. All right, welcome to the morning brief, investing with military precision. If you're catching us on replay, thank you for checking us out. You can get a free trial in the room. Just reach out to me at steve@ototnow.com. All right, our mission objectives for today, we're going to grow our money, protect our money, live off our money. Specifically, we're going to talk about growing our money today on one of the best investable themes out there, and that is the EV battery theme that we have. And you know, today is Tesla Battery Day. That's been hyped for about the past month. Interestingly, Tesla is selling off going into that. So it's kind of funny because Elon Musk, who loves to tweet things out, happened to tweet out, oh, by the way, the things you see us present today aren't even going to exist until the middle of 2022. And that was a wah. That shaved about 4% off the stock price because of all the excitement that went into today. And it's so oh, by the way, yeah, don't get too excited. It's not even going to be here for a while, which is what got Nikola's founder in trouble, was talking about things over and over that haven't happened yet, that aren't even going to happen for a year. And of course, you know, he had to resign from his position. So we're going to talk about, obviously, the investable thesis is not necessarily in Tesla, but it's in who can make all these batteries, or not just make them, but there is one company out there that is already advertising batteries as a service, kind of like software as a service. You just download it. So batteries as a service, and we'll talk about how they're going to do that. All right, and our question today would be, should I purchase an annuity? I've been getting this a lot lately because the market has sold off a few percent. It's time to absolutely freak out. Even though we were like, 40% lower months ago in March, and you'd be happy if you knew that we were going to recover all of that. But anyway, so the stress is high and people are starting to ask me about annuities. So I'll share my thoughts here, and you can make your own decision based off of what I share with you and what you think. So our flow today is going to be long, short, open, short, long. That's what's going to switch a little bit in the new format. We're going to do a market review today, then we're going to do a headline review, and then we're talking about the long-term investments. You see the first 5 names there are individual stocks, and then the last one, of course, is an index fund option for the index folks out there. Then 10 minutes prior, we're going to go into our short-term day trading opportunities. Interestingly enough, with the market pretty flat going into today off of a decent-sized down day yesterday, there are only, yesterday I had, 30-some lists, there's 30-some names that are on the way down. I don't have any single name that qualifies yet between that 5 and 10% down point. I have 2 that are off by 4%, one of which is Tesla. So, interesting that the market is really, really, really flat today. On the long side, I have 6 names picked out, which all would qualify, and we'll look at those more here in a minute. We'll execute the market open and transition into the question of the day at the end. For contingencies, reach out to me at tech support at steve@ototnow.com. I've helped 2 of you this morning, so don't know what is up with this link, but if I send it back to you again, it works the second time. So thanks for checking us out this morning. For standard disclaimer applies. This is an educational presentation, so do your own due diligence before acting on anything you hear me present this morning. All right, let's go up to good morning to a couple of folks that just joined us. Let's go up to, there's new changes coming for the folks too that just joined. All right, let's see. Let's go up to Think Pipes. New changes either tomorrow or Thursday. We'll see. Okay, here's our SPY 1 year in review, mostly focusing on us breaking out at this channel right here. And again, you see the three trend channels that are going up. We've broken out the bottom of that. I've said no worries at all until 320. Actually, we could go all the way down to 300 here to this level before I would be concerned. Obviously, people are concerned already, and you can be concerned if you want. I think the election takes us down into this 300, 320 range, and we basically flatline there until we know what the new tax is going to be, which could be early next year. So people are saying, well, if you know that, then we should sell today, go to cash and everything we have, and then, Steve, simply buy back after the election, buy it all back down in here. And I'm like, well, okay. Money management 101, you don't know what's going to happen, neither do I, so you don't go all in on one strategy. I've mentioned this a few times. I need to do another podcast on it, basically. But as a professional money manager, and I would welcome you at home to be doing the same thing, you have to figure there's 5 different scenarios. The market's up big, the market's barely up, the market's even, the market's down a little bit, or the market's down big. And you have to take all those into account. So if you happen to be in high school, then none of those really affect you on a long term, so you could stay long. You don't need to really sell Amazon today to buy it back in 4 months. What? Amazon's get over a 20, 30-year period, it's going to go up several thousand%. Don't get fancy, just hold it, that sort of thing. Now, if you are, say, middle-aged and approaching retirement in the next 10 years, well, now maybe this down big scenario is something you need to consider, but you still have time to ride out a 10-year dip in the market and recovery. So it's not as big, but you also want to consider, you don't want to go to cash because you still want to take advantage of the long-term markets. And you know that elections can be unpredictable, so can markets. So then you have to factor in all those variables. If you are into retirement, really you're over here and protecting from the downside. Do you care if it goes up? Does it matter if you have 4 million or 4.5 million? No, it doesn't. But it does matter if 4 million turns into 2 million. So that's a big deal. Those are the things you need to be taking a look at. So that's why you don't go all in and simply just because I think it's going to be lower at the end of 2020 doesn't mean we're going to be make drastic moves. It depends on where you're at. So enough on that. As far as here we are in the past 5 days, let me get to the correct chart. So pretty much a sold off, saw through last week, you saw yesterday, some decent move up towards the end of the day. So NASDAQ almost made it into the green. Again, that would be up into this level. But so today, overall, futures looking flat to up, so it's a good sign. I do think today will be an up day since yesterday was selling off. And there's some good news stories out there. All right, for earnings, we had, let's see, AZO, that's AutoZone, had earnings. They beat earnings this morning. We also have probably the biggest one. There's AZO here. Aurora Cannabis, pot firm that we're in. We know about that one. Really, Nike is kind of the litmus test for big retail. So hopefully after the market today, we'll get nice earnings from Nike, and that will help, not necessarily make the market scream higher, but it will help at least, put a floor in and say that, all is not lost just because we're in the election phase here soon. All right, let's go ahead and take a look at CNBC and go around the world as far as our headlines and how everything's doing. Let me refresh this, see if we're in the green all the way. Nope, not quite. Dow still a little bit. These are basically flat. NASDAQ, which is tech, is up a little bit. Europe up across the board. Remember, they were down a couple of percent yesterday, so a nice bounce there. Mixed over in Asia. Here's our numbers from yesterday, but what doesn't tell is how much it came back. After being almost down, 1,000, Dow only finished down 500. Still a lot, but better than where it was. Little strength in the bonds there. Oil, again, we're down below 40, but we're trying to get that back. And then our precious metals, remember they had sold off all yesterday, are back fractionally up. Nothing that I would really be concerned about. All right. New coronavirus concerns. If you saw it yesterday, the CDC put out guidance, official guidance, saying that COVID-19 is not transmittable through airborne particles, and that wearing a mask is really ineffective. They had to clearly walk that back because as soon as they announced it, everybody went, well, then what are we doing? Everybody's wearing masks, and it was kind of funny. Then they retracted their guidance. So I don't know what the truth is anymore. Were they told to retract that? Who knows? And they said that wasn't meant for public consumption. It's just like, oh, really? They said it was a draft. All right, well, I don't know. Get your act together. Is it or is it not airborne? And make the call, or keep your secret. I don't care. But to all of a sudden come out with guidance and then walk back on it is pretty dumb. So we shall see. There are talks about more lockdowns in Europe is kind of what's driving these coronavirus concerns. There's a state-by-state thing on CNBC. I don't know if we'll see the headline or not. But you can actually look at the numbers by state, and several states are obviously trending better in the United States. Okay, you know about Trevor Milton stepping down yesterday, basically before he got fired from Nikola. And again, that was a lot of hyperbole, a lot of allegations. Who knows what will come out of that? But yeah, he had to forfeit $166 million, which I'll hold my cursor here because wow, that sounds like a lot until you realize he keeps $3.1 billion. So doesn't sound like he's going to be that hard off, unless of course he goes to jail for whatever he did. But I don't think he would be going to jail. But I do think that he basically lied his way to the top. So whatever, he had done it before. He's got a track record of doing that and got in trouble for it. So maybe he'll do it again. I don't know. All right, here's the UK. We have Brexit kind of, as a negative headline across Europe. So we shall see. Musk dampens battery day. That was the tweet that went out and said, oh, by the way, everything you see today won't be around until 2022. So don't get too excited. Wah, wah. Stock sells off. All right. Political headlines, blah, blah, blah. We talk about this sometime, why Warren Buffett's way of beating the market will not be repeated again. And Buffett he said he couldn't do what he did then today because the information's widely available. What he used to do is he would be able to get information, not illegally, but he would be able to get it earlier before everybody else through the sources he had, and was able to invest on it. Again, it was all publicly available, but it wasn't like in your phone available. So he would get it first and be able to act on it. That's why he was able to outperform for so many years. And you hear lately, he's actually, if you go back like a decade, Buffett in Berkshire Hathaway has actually underperformed. Not significantly enough that I would care about. I still think his investable theses are some of the best out there. I'm always listening to what he's investing in. Facebook has its own digital currency. That was also basically a non-starter. I don't know why that jumped to the top there, but it's called the Libra. Yeah, whatever. I think that will go by the wayside. Bank stocks got hit yesterday. That was our theme we talked about. TikTok, blah, blah, blah. Still don't know exactly where that's going to go. I heard TikTok, the U.S. headquarters will be in Austin, so bring more people and more tech into Austin. All right, that's it for the headlines. Let's go ahead and talk about our theme of the day, which again is Tesla Battery Day and the firms that are out there that do batteries only. Take a look at the Tesla stock chart. My opinion on this is that it's way overpriced. The standard PE is at 18 to 21. They're at 1,000. Okay, so if you want to hop in on that train, feel free. But when you see charts like this, if it does continue down, I don't have a crystal ball either. But if this gets back down to the 200 or 150 level, people are going to look back on the chart and say, well, that was obvious. Look how high it ran up. But it's obviously not. It's not obvious to you right now because you're like, when stock market, like Apple after the split, Apple went higher and people are crushing me wanting to buy more Apple. I'm like, why would you buy Apple up at 140 when it's so overvalued right now? It needs to come in, take a breather, consolidate, and move back higher, which obviously it did. So who knows what will happen with the stock? I still think the value of the stock is down here around 100, but whatever. Some other folks believe me, 7% short out there. We'll see. Elon Musk is obviously brilliant. He's very good. He can talk a good game. He had to have watched a little bit of interest with Trevor Milton, basically getting run out by the board, his own board at Nikola. Could you imagine if the board finally got, and wanted to talk honestly and openly about what Tesla is actually doing? if you look at total number of cars they produce, it's like down here. It's a fraction of compared to Toyota, Ford, and GM. But Tesla is bigger market cap than all three. Okay. Anyhow, could you imagine if the board ran out Elon Musk? What would happen to this stock? Oh my. Oh my. I mean, seriously, it dropped 80, 90%. But we'll see. The important part is they are out there doing, they are changing the world. That is for sure. It's whether you're going to make money doing it is the jury is out on that one. Okay, so the investable thesis taken it over here to the Schwab Advisor Street Smart Edge. Again, Tesla on the upper left. The thesis is more EVs out there, whether it's Tesla, Ford, NIO in China, whoever makes them, they're going to need these batteries, obviously. And there's the, do you need to charge batteries or do you swap them out? That's another way to fill the tank is to swap the battery instead of going through the process of charging. Another thing is the battery life on Teslas they don't last forever. They're like any other battery. So you need to replace them. So NIO, which is the, it's going right here in IO. In the middle right, NIO is the Chinese firm, and they're the first ones to talk about this battery as a service thing. So they're going to start, like now you can get the Apple iPhone plan where you get a new iPhone every 2 years or whatever. Same thing, they'll put you on a battery plan where you're going to get new batteries at whatever intervals they decide, and it happens automatically, and they bring them to you and install them, so it's really painless. So pretty interesting concepts that we really haven't fully gotten our brains around. So I'd imagine in the US, that'll be something we'll be doing too. When you think of the big makers of the batteries in the US, you have Plug Power, which obviously has done nothing but go up after people realize, okay, these standalone battery companies are going to make it. The one I like a little better that I think has more upside is Blink Charging, BLNK. So that's where you've seen, you'll either have this in your portfolio or you'll see it popping in there. Obviously, it's been hit lately, but on the way back higher. And again, this is a name. Close your eyes. Stop wanting to sell it. We're holding this for a good decade plus, and we'll see where it goes. NIO, we talked about, they do make their own EV electric vehicles, which are cool in their own right, but the real moneymaker here is in the batteries. So people have said the same thing about Tesla for a long time, but NIO, kind of the same thing, the whole battery technology and all that stuff is from there. When you get back, speaking of battery tech, when you think of who actually, peel it back another level of who actually physically makes these is Delphi Automotive is one of the names out there. There are several, but one of the bigger names out there that actually physically produces the battery. So that's another name you could consider investing in. If you don't want to try to pick out any of the best of breed here, you can go with iDrive. Which of these would I be happy to own? All of them. I mean, the thesis is going higher. We know that you want to have a piece in your portfolio, at least if you're in the capital appreciation phase. Otherwise, you don't need to bother with it. And to me, the worst one up here is Tesla. So realize if Tesla would fall because of Elon Musk gets hit by a truck or whatever, I bet all of these names would get cut by like 30%. So that's how much power he has over this whole industry here. Okay, let's switch out of this. We'll go over into taking a look at some names on the move for day trading opportunities. All right, we'll go off my chart here first. AZO, this is AutoZone. They are a earnings play for today. They did beat earnings, so tough price point to trade. 1186 up to 1235. So they're sitting right here right now. They've been up to 1280. So gosh, I mean, you're only going to have a handful of shares, and your stop is probably going to be $10. So tough to trade, but certainly it is in the heart of the envelope as far as our strategy. Again, looking for a 5 to 10% gap and go, gap and long. Here's the headline: beat by $8. Well, at this share point, that's not as amazing as it would be at a lower price point level. But AZO looking good out there. Let's look at GameStop. This one's out of our zone a little bit, but there was venture capital interest coming in to try to save GameStop. So they're 875 was a previous close. are up to 1067, so up in here. Must be on the top volume list. Let's check that real quick. Yeah, only second to Apple in volume this morning, so 20%. So it's kind of out of our range, but there's definitely a play out there. Wow, I didn't see this. Blink charging, up 18% today. Well, how about that? I said it's my favorite, and I kind of like it. So high fives across the board there. Let's see what BLNK has for a headline. All right, that's interesting. Deploys or sells 539 charging stations across 24 states and 4 countries. All right. Represented nearly 100% increase of the same 3-month period in 2019. So those are pretty good numbers. So yes, I'm glad we have that in our portfolio, and it's going higher. Again, we'll take a look at it. More room to run. Well, yeah, it really does have a ton of room to run. It's here, and it was up in $14. What's that, at the beginning of August? So yeah, this could run a lot higher. So we'll keep an eye on that for a long trade, even though it's out of our normal window. All right, other names out there. We looked at GameStop. Actually, did we look at it? Up 21%. So again, I wouldn't touch GameStop up here. GNCA. All right, gives nod for start of cancer therapy study. This is Genesia. I don't know if I'm saying that right. Biosciences. Gapping up. So 232. It's got the volume 240, 232 up to 245. All right, we can keep an eye on that. That's heart of the envelope stuff. FLGT. Biofirm doesn't have the volume, so not going to do that. VRM. Vroom has the volume, gapping up. Carvana. No, wait. This is Vroom. So see how this is tied in down here. Increases the price target, so it's an upgrade as well. So it's an upgrade. So let's see. Ooh, I like this chart. 46, 43, 50, 50. So it's got, gosh, it was up at 75. So just got an upgrade. This is going to bounce and go higher. So I might look at them for a long play or a little later. I'll put that in my notes. 46 to 50, heart of the envelope. I like it. So we'll take a look at that. And CVNA, maybe that's Carvana, is my next one. That is Carvana. All right, 173 to 217, so it's popped up significantly on an upgrade as well. So both those names traveling higher, Carvana directly and Vroom indirectly. All right, so look at the shorts I have up here. The first one, we don't need to look at Tesla. We're not going to short that. CTMX. It was a downgrade, low volume, so don't have anything there. All right, over to the charts. Apple moving higher. We like that. Let's see how the overall market is doing. Everything's in the green as far as the futures. Tesla, no. NNOX, we're not going to touch that today. Blink, yep. None of those fit our criteria. There's Carvana up 25% now. We're not touching that. Zoom only gapping up 2%. There's a big work from home study out this morning, so that's why a lot of these work from home names are going to be up. Google, Trade Desk, Amazon, none of those are in our window. It's a trading vehicle. Peloton's down 3.8%. On nothing, probably just running up higher, nothing to really trade there. All right, and don't see the volume. Now it's too low for 3.76. Blink we talked about. Vroom we talked about. Pacific Ethanol, I'm not familiar with these guys. They meet our numbers though, PEIX. Not gapping up on a headline though. All right, 5 minutes to go. Don't have anything on the downside. I'm going to switch over to TD Ameritrade. I still want to look for something on the downside, but let's set up our trading platform first. All right, we have SPY on the left. We're going to go with BLNK. It's already moved kind of out of our window, but I want that up there so we can kind of see how that's acting. The one I'm really looking at is VRM, which is that Vroom. Has room to go higher. And then the third one was GNCA on that cancer news. They were up 8% pre-market. Kind of lightly traded, so kind of looking at this one, first of all, I think if we can get in here for a 5 or 10 cent stop, we can capture a move higher. So while those are set up, let me look at Market Watch for a short name. I don't have anything I like short yet. I'm looking at a pre-market screener. Yeah, the top of the screener here, pre-market, are Tesla and Peloton. I'm not getting in front of either of those names. So, gosh, I think we're setting up for a pretty big green day in the market the way these are coming in. Oh yeah, AutoZone beat earnings. We know that's up. Snap-on Tools is kind of trading higher. They're SNA, they're up at 8% now. So yeah, nothing on downside. So long only is what we're looking at today. Let's look at gap size. So $9 price point. So for Blink, we'd be looking at can't go 40 cent. That's not enough. So that'd have to be 20 cents for Blink because of the volatility. Vroom, less volatile, higher price point. Normally you would go 50 cents at $50, but we don't need that much. We might need that much. We'll see. We'll try 40 cents. 40/50 is what I have drawn in here. And then GNCA, again, let's back this chart out so you can see where this is going. So this was trading yesterday all down in here. So it opened there, closed higher after a 3-day move down. Yeah, this has got a lot of room to run to the upside. All right, this will be primary, and we're looking at we'll wait for it to open. If we take it quickly, we'll need a 7-cent stop. If we let it open and let some volume come in, then 5 should be good. So 0.07 right away or 0.05. GNCA, these are all long, so there's no issues grabbing them. All right, minute to go. Room moved up there. Let's see, Blink. Where's Blink at? The top 10 in volume. Blink's up 22%. So let's take it. I do want to. Now it's probably going to sell off. So let's in our left chart put PEIX. This is the one that needs the volume to come in. Pacific Ethanol. Well, it has the volume. So this one's a heart of the envelope as far as meeting our criteria. So we shall see. All right, welcome to the play of the day. We have 4 charts set up here on TD Ameritrade. Think Pipes on the left. We have the SPY. So we can watch that minute by minute. And the other three panels, middle left is PEIX. Again, that is Pacific Ethanol. We'll be watching that. These are all longs. Then we have Vroom in the middle, long, and then we have my favorite GNCA on the middle, on the right, which is looking long as well. So again, focusing it over here on waiting for some volume to come in. Jumped up at 250, 247. If it hits 248, let's take this quickly. Again, looking long. Boy, look at Vroom and higher. So again, waiting on GNCA to tick up here to 248, then we're going to take it. There it is. So you're into 248 long. Let's go a 4-cent stop. I think that's going to be plenty. So again, we're taking this long with a 4-cent stop down here at 244. So this is our negative stop, if you will. So 4 cents higher, we'd be looking at 252 is our first one here. So there's the first R. Again, this was news on Cancer Play. So 256 is the second R. So we like that. So 260 and we're out of the trade for GNCA with our 3R point. All right, PEIX went higher, and then I don't like the way that's set up now. Let's look over at BLNK. Whew, it was up 20%, dropped down to 15. Again, we're in this trade, jumping up to 257. Here's our entry point, 248. If it comes all the way down to 244, we're out. We're down an R. No big deal. So stick to your guns and let the trade happen here. All right, BNOK. What else we look at? GNCA we are in. Let's look at AutoZone, see what happened to AutoZone. It met our criteria higher. Selling off a little bit. Again, tough to day trade around this point up here in the 12,000s. So market 0.4 in the green. Across the board, we're in the green. Dow's up 0.1, NASDAQ up 0.65. So plenty of strength for our trade here, long. So even though obviously it retraced the 2R point, that 2R, just let it cook. It'll go higher. All right, VRMN up 11%. Let's check out Tesla, see how it acted. It was off 4%. I figured people would buy it today, in spite of his tweet. Nope, almost down 5%. Going into their big hyped battery day. That's too priceless. All right, market finding its feet, like these dojis down here, over 0.5% higher for the SPY, certainly different than yesterday. All right. Since Blink is up, let's check Plug. I'm kind of selling off as well. Man, this Vroom, so 51 all the way up to 53. Heck of a move there. All right, other names on our list. Carvana, CVNA. Gapped up 20%, selling off into the open, so that's some profit taking there. Not concerned about that. FLGT didn't have the volume earlier. 80,000 shares, 20, so it's got the volume now. And this was a headline. I don't remember the headline, but that's what's causing the move. GameStop on acquisition news. I'm sorry, not acquisition, but venture capital is going to come in and save GameStop. So again, 23%. That's been a heck of an entry. Let's see, if you watched all the way down, your entry point would be at 10.4, going higher. So that's pretty nice. GameStop used to pay a nice big dividend, which they have killed off due to COVID-19 and worried about going bankrupt. So anyhow, nice move higher in GameStop. Let's check out Apple. Up 1% on the day. Started earlier, kind of selling off a little bit. That's interesting. Let's check out Amazon. same sort of thing, up a couple percent, selling off. So, all right, so where are we on our trade? We entered at 248. We are up an R right now. We're 4 minutes into the day. I'm going to switch over and look at some other names, and we'll come back. So if you're in this, have this up, pulled off to the side. All right, let's look at some names in the green. Twitter up a couple percent. Callaway Golf, Amazon, WP Carry. DraftKings after the big sell-off yesterday is up. No options up here that are up higher. So there's Apple floating around up a percent or so. So a lot of names in the green there. Let's see who. Red, Nikola, that's a chart we can pull up. Remember they sold off hard yesterday after their founder stepped down before he got forced out. Luckin in the red, not significantly though, a couple percent. Shell's an EV name we know. Yeah, hardly any names in the red there. So I don't know. I think probably going to have a decent green day. Hey, that's good you're bringing up there, Burner. Hey, other folks in the room, Burner threw into the chat. The presentation's freezing up. I will check the replay. I assume what's time we're at, 8:30. It's probably been going on since the open. So I will check the time to see if it's freezing up in the recording, which would tell me that it's on my end. But if anybody else can speak up there and let Burner know if you're having any issues out there. All right, so not a lot of names on the downside, up 0.5% across the S&P and NASDAQ. So let's go back to our chart and see how we're doing. All right, 248, 252, 256. We're looking at 260, so we'll get it drawn in here. Here's our 3-hour point. So just going to hold that. There's 260, so we're out of the trade, and that's our 3-hour trade in GNCA on the positive cancer news. So very nice trade today. Again, it almost hit it right there at the wait. Yeah, I have that drawn correctly. So yeah, it hit 2R almost instantly after we took it, and again 3R, had to wait for it to come down, then walk back higher up to the 3R point. So overall, a very nice trade. Should have drawn my check mark in there. All right. All right, that is it for the trades for today. I do think we are going to see the market higher today. There's Nikola. I would not touch it again, just because all the issues it has. All right, let's talk about the annuities, which is kind of a boring topic, but give you my thought process real quick. So coming down here, share that out. Here's the pre-market screener I was looking at for the up and down market watch if you ever want to check in early and see what I'm looking at. That is one of the places I go. All right, overview of annuities. All right, so what does an annuity do? Well, it's an insurance product, and when you think of insurance, insurance passes the risk. So life insurance. I die early. My family couldn't take care of themselves without me. I'm just hypothetical. I'm not talking personally, but so if you're the primary earner and you pass away early, and your family would be in a tough spot, then that's why you buy life insurance. If you are maybe in retirement, you might have a survivor benefit plan or something like out there that is also a form of insurance. Something happens to you, that money goes to your family. Well, the purpose of insurance, again, is to finance a catastrophic loss. So obviously a loss of life would be catastrophic, and then you have money that flows in behind you. If you are self-insured, then that means you've got a net worth commensurate with, it would not financially impact you if you passed away, because everybody else would be fine. Then you don't need life insurance anymore. You don't need to pay up for that insurance. So when you're dealing with insurance companies, they're not trying to hide it, is when they tell you that every product they have is you pay a premium on it. So if you're paying a premium, think about going to the gas pump. When you pay a premium, you are paying more than you have to. Okay? If you buy options, you are paying a premium. If you sell options like we do, you receive that premium. So the insurance company, every contract that they write, they literally pull out the pen and paper and write on this contract. They don't drop a contract out there unless it is financially beneficial for them. So an expected value, it is positive EV, meaning they won't write it if they don't think they're going to make money on it, and you aren't accepted. So if you accept it, you know it's a money loser from an expected value perspective. But what you're gaining is the transfer of risk. So that's life insurance. Car insurance, again, you're transferring the risk. The fact that you don't want to write, if you have a $25,000 car, you insure it because you don't want to write a $25,000 check if something happens to it. So you risk transfer. Same thing with your home insurance. If your house burns down, you might not be able to afford to rebuild it. So you pay your homeowner's insurance. So why do I bring that up? Well, if you go into an annuity, what you're doing is you're passing the risk off to the insurance company. You're saying, take my money and give it back to me at $300 or $400 a pop for the rest of my life. So, but the problem is if you hand all your money over and you get hit by a truck a week later, that money's gone. It doesn't go to your spouse, your heirs. It doesn't go to anybody. It goes to the insurance company. So that's the negative side. Now, if you happen to live until you're 105, then you would have gotten a better deal than you got with the insurance company, and you would have won. So, but that's really, if you're buying an annuity, it's really because you don't like the ups and downs of the market, and all you want is guaranteed income, and you either don't know how, or you don't want to do it on your own or pay somebody to do it for you. So you're surrendering your money over to them for them to do that. So there's different types of annuities out there. If you think a standard pension, whether you're coming out of the military or out of the civilian world, an immediate annuity means as soon as the pension starts, you get the money on a monthly basis, and you get it forever till you pass away. That you get it forever until you pass away. Your forever personally ends, forever goes on. But so that's the deal. That's an immediate annuity. You can also hand over a big chunk of cash and get a deferred annuity, which means, say, like I'm 51 and I give an insurance company $600,000. Well, if I take an immediate annuity, they might pay me $800 a month for the rest of my life off my $600,000. What? But if I want a deferred annuity, meaning here, I'll give you $600,000 today. I don't want you to pay me anything until I turn 60, 9 years from now. And at that point, I want you to pay me $1,200 a month. Well, obviously, they'll do the math better than you ever could. And they'll go, yeah, if it's financially beneficial to them, they'll go, yeah, we'll take that deal. If it's financially benefit to you, they will not take the deal. So just realize that. So that's a deferred annuity. But once it starts, think of like a military reserve retirement. It's kind of a deferred annuity. You can stop working well before 60, but you don't start getting your money until 60. If you want to figure out how much, if you're on a pension plan, you can go to Immediate Annuity Calculator and do the math of what your annuity is actually worth. When you retire from the military, I've looked roughly at the numbers. As an officer, it's about $1.7 million on what you would need to pay out of pocket to get an insurance company to pay you what's your pension is worth. Obviously, it decreases in time because you get older every month. So there's less of a payout. So it's worth less as you get older. If you happen to be in your 80s and still have a military pension, your pension's only worth a couple $100,000 because of life expectancy sort of things. So just think of how expensive that is. If you're enlisted and you retire at 38 on a lower salary, generally that's right around $1 million of what that annuity is worth. So things to consider. All right, if you consider buying annuity, steady income stream. Immediate annuities pay right away. Deferred annuities, pick a date in the future. Yeah, there's different options with annuities, and the life insurance folks or the insurance folks will just scream about this all day long of how tax beneficial it is. Well, it is, but it's still negative expected value, right? You could easily do it on your own, pay the taxes, and be better off. There's a penalty. Generally, people get into annuities unless you got in it in the 80s and you scored an annuity with a minimum interest payout. With interest rates so low right now, that means you're going to have to pay more to the insurance company to get less. However, a lot of people that buy into annuities break them, right? So the insurance company gets the better deal when you buy the thing. And of course, they get a better deal when you exit the thing. Right. So they win both ways. But yeah, a lot of people are in annuities for years and then break them because you know what? It's like, yeah, we're not getting anywhere near what we'd be doing if we did it on our own. We'll talk about that in a minute. So risk transfer, it's a contract, you know that. How they work. This is how they pay out. We talked about the payout of immediate annuity and deferred annuity. Okay, annuities can be fixed where you agree to, here's my $600,000. Please give it back to me at $800 a month for the rest of my life. If you think that's a good deal, then take it. They love this deal. So that's a fixed annuity. Now you can have indexed annuities, so you're worried about either inflation or low interest rates. That is, tied to an index of some sort or a variable with a guaranteed minimum. This is where the folks that bought in the 80s, when you get an annuity and interest rates are at 7%, well, you got a pretty good deal. And they said something like, hey, guaranteed minimum income benefit will be down here. And obviously interest rates, nobody thought they could go to zero and stay there for decade over decade. That's a good deal. So those are the different benefits. And you could also do it in your IRA. So it depends on how it is, taxability and all that. Sometimes it's a return of principal, which means it's your money. They're just giving it back to you. And you don't pay taxes. But sometimes there's an earnings piece you have to pay taxes on. So it can be different. So why am I against these things? You can do the same thing on your own. That's it. When you hand a chunk of money to the insurance company, say $600,000, they're going to invest it. They're going to find the best bonds that are out there that used to pay 4.5% to 5.5%. I talked about that for a couple of years, trying to get folks into those. I'm not buying individual bonds today. They don't pay enough. You're down in that 3.5% to 4.5%. Not quite enough for me to get into them. If you're already in them, good news. I mean, great. You're still getting that 5+%. If you're not, I'm not buying new ones here. I'm using a bond fund for holding for now. But if you have $600,000 in your portfolio and you design it at 5%, which you can do with some bonds now still, but mostly dividend paying stocks, that pays off $30,000 a year. So $30,000 a year interest, and the 600 stays the same, right? That's all they're doing. So they'll do, okay, you give us 600,000. It's just like, that's going to make 30,000 a year. Divide that by 12. I think that's going to be 2,500. So since we can do it on our own and make 2,500 a month, we'll drop a contract and pay you 1,600 a month. And you go, sounds good. And then they worry about it for the next 40 years while they sit there and make money off of your money for the next 40 years. So, up to you, but just know what you're getting into before you get annuities. They do have a bad name. I would say there are times to have an annuity, but those are generally pretty rare. And you're generally, if you're taking an insurance contract, you're generally not in a financial position to be able to do anything yourself. So you might be forced into it. So anyhow, that's enough for today on annuities. I don't see any questions popping up on that. So you can bring those tomorrow if that generated any questions. So that's what I've got for you today. Hopefully I'll have my changes in place for tomorrow and you like what you see. So we'll talk to you then. Bye.